What if you're a disabled veteran married to another disabled veteran, or you're a disabled veteran looking to marry another disabled veteran? There's a big financial tax break when it comes to the IRS, when it comes to filing taxes, married filing jointly. I want you to take a look. So, married disabled veterans. The example I'm using here is, let's just say there's one disabled veteran who earns 50,000 a year. So they have W-2 income of 50,000, and there's two disabled veterans married to each other. So you're going to get to, well, as of this year, 2026, the standard deduction was $31,500 married filing jointly, which means in the example, you just use the 50,000 minus the standard deduction 31,500, taxable income 18,500, but you really made 50,000. At least one of the disabled veterans. And as you'll see here, we'll have the other disabled veteran spouse. We'll use the example 100. They're 100%, so they're getting about 50,000 a year, and they're retired. And then the second veteran is also 100%, getting about 50,000 a year. So by one of the veterans being retired and one of the veterans working, so you have a combined $150,000 income. Well, you got two veterans, there's 100%, and that's approximately 100,000, a little bit over, but we'll round down to 100,000. And then you have the one veteran who works a job for 50,000. So essentially, here, if we look at it, we have $150,000 in household income, yet taxes is going to be paid on uh, just $18,500. That's the taxable income. Now, you know, this is just the example we use here, but also we can use a different example, and we can just say, let's just say both veterans have W-2 income of 50,000 a year. So, and that would mean household income of 200,000. We got both two 100% veterans, so that's 100,000 a year. And uh, if we use a different example, both veterans having W-2 income of 50,000, 50,000. Now we have 200,000. But if we take the W-2 income of $100,000 minus the standard deduction of 31,500, now the taxable income becomes $68,500. So in this example, that's $68,500 in taxable income, but the total household income would be 200,000. So these are the breaks that two married disabled veterans, specifically at 100%, uh, can get, and it's very extensive. Now, I'm sure veterans who are 50%, 60%, 70% can would see similar tax breaks, uh, as VA compensation is not taxable. But the heaviest breaks obviously is going to be on 100%. So this is the reason I'm using it. 100% disabled veterans, permanent and total, in my example. So so for federal income tax purposes, uh, in the original example I'm using here, 50,000 W-2 income considered, which is reduced to 18,500 after the standard deduction. Uh, this is remarkable in the sense that it really stretches the money, and I'm talking from firsthand experience. And I'm not going to encourage any 100% disabled veteran to just go seek out another 100% veteran just to marry them for the tax benefit. But I mean, um, um, you know, if you just happen to stumble across someone you like and you get married and both of you are 100%, there you're going to enjoy a lot of benefits. I did a previous video of another benefit, Chapter 35 DEA. You can take a look at that when you get a chance. But I'm going to argue that this is the biggest benefit by far. Um, I don't think you can beat it with a stick. $150,000 household income, yet you're paying taxes on $18,500. If you like this video, hit the like button and subscribe. Veterans helping veterans.